All right, let's talk about a company that is, and I mean this literally, at the very heart of the entire AI revolution. But here's the thing. Chances are, you've never even heard of it. Nope, it's not making the chips, it's not running a giant data center, but without it, our digital world, everything we rely on, would just grind to a halt. The company's name is ASML.
Now, if you have heard of them, you've probably heard this exact sentence, right? It's the go-to one-line summary you find everywhere. And look, it's totally true, it's not the whole story. Not even close, actually.
Focusing only on that simple definition, it's kind of like describing an iceberg by only talking about the little bit you see sticking out of the water. So today, we're going to go beneath the surface. We're going to peel back the layers to really understand the true power of ASML, its technology, its money-making machine of a business model, and why Wall Street is just completely obsessed with it.
So layer number one, the technology. And this isn't just some small competitive advantage. We're talking about a complete and total bottleneck for the most advanced chips on the planet. And it all boils down to one incredibly mind-bending, complex process.
That process is called lithography. The easiest way to think about it is like a super advanced form of photography. But instead of printing photos, you're etching microscopic circuits, billions of them, onto a perfect slice of silicone. The level of precision we're talking about here is it's almost impossible to wrap your head around. And here's why that is so critical. See, if you can get better at lithography, you can print tinier and denser patterns. That lets you cram way more transistors onto a single chip. And what does that do? It makes the chip faster and a whole lot more power efficient. This right here, this is the engine that has been driving Moore's Law and really all of modern computing for decades. But oh man, mastering this was not easy. ASML started out as this little underdog back in 1984. The real game changer, the bet the company move, was its decision to go all in on something called extreme ultraviolet lithography, or EUV. And as you can see from this timeline, this was a multi-decade gamble. Seriously. Other companies tried and they all failed, but ASML just kept at it, finally shipping production-ready systems in 2013 after pouring in billions and solving some of the hardest engineering problems on Earth.
So what's the bottom line? The result of that whole journey is this, a true monopoly. If you're a TSMC, if you're Samsung, if you're Intel, and you want to build the world's most advanced chips, the kind of power AI and the best smartphones, you have to buy your most critical machine from one company, period. And that company is ASML. Okay, but having a monopoly on the machine, that's really only part one of the story. The next layer we've got to understand is their business model, because it is so much smarter than just, selling a few crazy expensive boxes every year.
Okay, now what's so interesting here is how they break down the business. So yeah, of course they sell the systems, that's the top layer. But look closer, at that second layer, installed base management. See, once a machine is in a factory, ASML keeps making money from it. How? Through services, software, upgrades. This creates this powerful recurring stream of revenue right on top of the initial sale. It makes the business so much less cyclical than you'd think.
And we're not talking about a small piece of the pie here. I mean, look at these projections for 2025. A full quarter of their nearly 33 billion euros in revenue is expected to come from servicing and upgrading machines that are already out there in the field. That's a huge, often overlooked part of what makes this company tick.
Just let that sink in for a second. This is not just a company that sells hardware. No, it's an industrial platform. It builds a massive installed base of machines, and then it gets to monetize that base for years and years and years to come. That combination, a tech monopoly and a durable service business, is just incredibly powerful.
Which, of course, brings us to our final layer, the stock price. Because when you have a business this powerful, you better believe Wall Street notices. And that creates a fascinating puzzle that every single investor has to try and solve.
And this is the question, right? This is at the heart of the whole debate around ASML. At the end of the day, they make giant physical machines. And companies like that, they don't usually trade at these crazy software-like valuations. So what gives? What's going on here?
Well, let's put a number on it. Based on its projected 2025 earnings, the stock was trading at nearly 50 times its annual profit. I mean, wow, that is a very premium price tag. It tells you that the market isn't just expecting good things, it's expecting something truly extraordinary. So, on Wall Street, you've basically got two competing stories. On the one hand, you've got the skeptics. They say, look, it's a cyclical machinery business. It shouldn't trade at a 50x multiple. The stock is just way too expensive. But on the other hand, you have the view that tends to win out, that ASML is this unique quality compounder, a strategic monopoly with sticky, recurring revenue that absolutely deserves its premium price.
This little matrix here really shows you what you have to believe to justify today's price. To get to a stock price over, say, 1,200 euros, you need to believe two things. First, that their earnings are going to grow significantly, up to 35 or 40 euros per share. And second, that the market will continue to pay a really high multiple for those earnings. It's a bet on huge growth and on sustained quality.
But of course, no company is perfect. A story this good, a price this high, it means we have to be really clear-eyed about what could potentially derail the whole thing. And the risks are very real. Geopolitics and export controls are, of course, front and center. The semiconductor industry is still deeply cyclical, meaning a downturn could hit spending hard. They have very high customer concentration, just a few big players, and then of course there's the simple valuation risk. You can pay too much for even the best company in the world, and that can lead to pretty poor returns.
And that really leaves us with the final, essential question. Look, there's zero doubt that ASML is a one-of-a-kind, strategically vital company. The real debate isn't about the quality of the business, it's about how much of its brilliant future is already baked into today's stock price. And, well, that's the puzzle that every single investor has to solve for themselves.